Lesson number 4 is a very important lesson because it goes back again to the cash flow quadrant. As we talked about, we recommend keep your daytime job but start a part-time business. And one of the main reasons I recommend that is very simply because, as we all know, that the rich pay less taxes than the people that work hard. And the reason for that is that for each different quadrant, there are different sets of taxes. There are people that say that there are only two things that are for sure, that's death and taxes, but it wasn't always that way. America, as we may remember, was actually founded as a tax-free nation. In 1773, we had a thing called the Boston Tea Party, which got rid of the high English taxes on our tea. And so for about 200 years, America grew very rapidly because we had no taxes. Then in 1913, we passed the 16th Amendment on the tax the rich idea, and everybody got really excited about that. But as we know, we don't really tax the rich. In 1943, there was an act called the Current Tax Payment Act. At that point, anybody who was an employee got taxed before they got paid. So when somebody says, I can't understand, the money's going right through my fingers, that's not really true. The facts are about 30 to 50% of your income doesn't even reach your fingers. It's being vacuumed out of your pocket right here in the E quadrant. So these guys here are really happy because the employees, the guys with the W-2ers in America, were being taxed the heaviest. So in 1986, the rich don't like it that these guys, the self-employed and small business owners, were getting away with it. So they passed in 1986 the Tax Reform Act of 1986. And at that point, anybody who was a small business owner, more specifically the smart guys in school, which S stands for, the doctors, accountants, attorneys, engineers, they could not operate by the same tax rules that the rich did. So over here, the difference is that the tax laws are written differently for the business owner. And that's a very important part of understanding how to get rich, because they pay a different set of taxes than these people, which comes up to lesson number 4, Richdad talked about, was the importance of knowing taxes and corporations. One of the ways the rich avoid paying pay less taxes than the average person is very simply much of their earnings actually go through a corporate structure. So that's how the rich avoid it. And so what Richdad said to me was, if since this is a free country, if the rich can do it, why don't you do it also? And so that's what we recommend for people. Plus, always have good accounting and legal advice, and good advice before doing this, because if you do this just to avoid taxes, that's illegal. But if you do it because you want to make more money, then it's legal. So please get good financial advice. So a very important part, your number 1 expense is the subject of taxes. And if you want to be rich, you need to get control of that. And the way you get control of that is by noticing the difference between the financial statement of an employee and a business owner. If you go quickly through it here, income statements and balance sheets, one of the big differences is an employee, a W-2er, ever since 1943, their first line item expense is taxes. And the reason they really can't get ahead is because the government takes it before they get it. On the corporate structure, not all of them, but some of them, taxes are the last line item expense. So one of the reasons it's easier to get rich by minding your own business, understanding corporations, is that your income can come down and be expensed out, decreasing your gross taxable income, making your taxes less. In other words, more of this income is actually coming into your asset column, where this individual, that money never gets to the asset column, it's going out the door. So that's one of the main reasons that Richdad's lesson number 4 was such an important lesson, was to know the history of taxes and the power of corporations. It's a very important part of your financial education. So we at Richdad.com, being very cognizant of educating people to be on this side of the quadrant versus this side, what we have created here is a product along with one of our best tax strategists. Her name is Diane Kennedy. It's called Your First Step to Financial Freedom. For those of you who would like to understand how to understand a little bit more taxes and corporations, as well as to set up your own personal finances, like she says, keep your daytime job but start a part-time business, one of the ways to get ahead financially is to obey the laws, have great tax advice, set up your financial statements legally, ethically, and morally, and then start expensing some of your personal expenses as business expenses. So in this tape set here with a workbook, it goes into how you can convert some personal expenses into business expenses, and that's how the rich play the game. So please be financially smart and obey the laws. But always remember this advice of going to school, getting a good job, and working really hard in the E quadrant, not that intelligent. Because the problem is with working really hard in the E quadrant, the more your income goes up, so does your taxes. That's not that financially intelligent. So unfortunately, in most of the world, the people that work the hardest pay the most in taxes also.